can't say it enough. We're not in a bubble. SpaceX, OpenAI, and Anthropic are not public yet. We are in a super cycle that is still early innings. Will it be a bubble? Yes, it'll likely go to a bubble. When you get AI for the dumbest crap you can imagine, and that is going IPO, that's going to be the sign that you're near the top. There are shortages everywhere that you look. These stocks are still cheap looking forward. Doesn't mean they won't have a huge 30, 50% correction before they do the next thing. I believe that risk assets, Bitcoin and stocks, they're going to rise in response to this AI super cycle, the growth and productivity booms that we're going through.
Is Bitcoin going to end the year above 100K or below 100K?
I'll go above.
We are seeing charts that are just sort of eye-popping. I mean, if we bring up this here, this is the KOSPI, right? The South Korean stock market composite index. And it was trudging along for many a year. This goes back to 2022. And then we see it just take off last summer, a year ago. And it has gone essentially straight up. It's up 200%, right? It just since last June. And this is really riding the back of the memory need for the AI build out. We're seeing a lot of charts like this, right? It's not just the Korean stock market. It's also Micron. This is crazy. If we look on the monthly, you can see this is, this is pretty crazy, going from $98 to $898 in half a year, right? Or just over a year now. So, I mean, what is going on here? Is this sustainable? Is this the mother of all bubbles? And should people be euphoric or cautious?
Okay, so it's an excellent question. And I'm glad that you started with Korea, because it's probably one of the perfect ways to set this answer up. And if you'll allow me, because you just ask a great question. Everyone wants to know is this a bubble? That's what everyone wants to know. So let's talk about the bubble specifically in AI. Because I'll talk about Korean stocks, I'll talk about Micron, and I'll talk about the S&P 500, and I'll answer, is it a bubble on all of them? I promise. Starting with the AI bubble in general. Is this an AI bubble? It will probably grow into a bubble. That we know from history, because capital tends to flood toward the latest innovation, especially one that's making waves and changing people's lives and changing the way we do business, like the internet. So will it be a bubble? Yes, it'll likely go to a bubble. Are we in a bubble now? The reason that we are so clearly not in a bubble now mainly is twofold. Number one, the IPOs haven't happened yet for the models themselves. And number two, the businesses that are making the stuff needed to compute. So I'm talking about chips, and this is the Korean answer also a little bit in it, and the Micron answer. There are shortages throughout. So it can't be a bubble if they're not making enough to service the demand for compute, which is the case. The demand for compute comes from two places. It's three, but it's really two. It's the models. So this is OpenAI and Anthropic. These are the two, and we'll throw in SpaceX there. So we have three companies that are pre-IPO that have top AI models. OpenAI, Anthropic, and SpaceX. These three companies have not IPO'd yet. They use compute, which is served by Microsoft, Amazon, and Google, for example. So these companies are paying Microsoft, Google, and Amazon to do the compute. The compute that they pay for from these companies goes to two places. Number one, it goes to you when you query the AI, and it gives you back an answer. So those are tokens that it's serving to you, the user. And the second place that the compute goes to is to training their own models to get better. So they have to balance. And the CEOs and CFOs have spoken about this. It's their biggest challenge: how much to use themselves and how much to use to serve the customer. So already there's a scarcity because they have to hold back tokens for themselves. And I said it's 3 because on the model, on the lab side, they use it for training the model, and then they use it for their own work. So it's like 2 uses within that internal use. But the internal use, which goes to training and internal actual work that they're doing, that all those tokens cannot be given to the customer. So the customer is facing a shortage of tokens. The labs are facing a shortage of tokens because there's unlimited tokens they can use to train and to make their models better. So all of that is constrained. Why is it constrained? Because you have a constraint on the number of chips that are live and plugged in and doing the compute. So there's a constraint on the number of chips that are plugged in. There's also a constraint on the energy to power all the chips that do exist and are coming online. There's also a shortage in the data centers that are the physical infrastructure to put the chips in and to plug the electricity in. Then within the chips themselves, there are shortages on memory. And then in the smartphone world, which there's a huge structural demand for memory, and not just smartphones, but all computers in the world, any computing device that needs memory, now all of that memory is being swallowed up by NVIDIA because they're the largest bid and they will pay the most. So everyone else gets a price hike or their supply cut off. So at the low end of smartphones, smartphone production is going down because they don't have enough memory, because if they actually paid for the memory, it would take them to a negative margin, or it would destroy their margin. So they might as well not make the phone. There are shortages, Rob, everywhere that you look. It's not a bubble. Because you can't, the companies can't serve. So from a demand side, it's not a bubble. Valuations are their own tail. And so we can say that, yes, this stock might be very expensive versus this one isn't. And so to answer your Korea story, Samsung is addressing the shortage from TSMC. Taiwan Semi is the company that makes 90% of the world's chips. The other 10% is Samsung and Intel. So the bet on Samsung going from 6% to, let's say, 16% or 26%, whether it grows from 6 to 16 or 6 to 26, in a world of shortage, that's years of capacity for Samsung. And then SK Hynix, which is the Korean Micron equivalent for memory. And so, that now is the Micron story. These companies are being bid up because it takes 2 years to build a factory that can make a fab that can make RAM, DRAM, dynamic RAM. And so there are shortages everywhere. And when people buy these equities, specifically single name, they're betting that this is a supply crunch that can't be quickly addressed. And it will only be addressed by higher prices or more factories that are years away. So a short-term monopoly or a little duopoly for these couple companies that are dominating the memory realm. So while any individual company can get too expensive, and so maybe the Korean stock index in general is in a little bit of a bubble because it's mostly dominated by a couple companies. While that might be the case, and while Micron might be expensive today, Micron is going to several trillion in market cap. So whether that's in 1, 2, or 3 years, it's not expensive on a 3-year forward basis, which is why it's going up like it is. It's getting priced in. That chart you showed me on the Micron monthly candle, by the way, that's a breakout. That's not a bubble yet. Zoom out. That's not a bubble. That's not a bubble yet. It's the breakout. And I don't give investment advice, and we don't make portfolio, or we don't give trading advice. But we do make portfolio calls and portfolio recommendations from our research perspective. And one of the ones that I'm writing right now is that these stocks are still cheap looking forward. Doesn't mean they won't take a pause or have a huge 30-50% correction before they do the next thing. Actually, the volatility of it on the upside somewhat guarantees some downside volatility at some point to relieve the technicals before it can go back up. But the number of companies that will continue, SK Hynix joined the 1 trillion club today, I believe. The number of companies that will join it going forward that are downstream from this is plentiful. And the number of companies that will go from 1 to 2, Micron, I read today, had the shortest amount of time from 500 billion to 1 trillion market cap in history by a grand margin. I'm sorry, but on the S&P 500 and US economy, CapEx supercycle build out, none of these are in a bubble yet. They're just not. And I'm looking forward a couple years. I'm willing to stake a lot of reputation on that call. Mm-hmm. We are in a super cycle that is still early innings. I can't say it enough. We're not in a bubble. And when you get AI for the dumbest crap you can imagine, and that is going IPO, that's a bubble. That's going to be the sign that you're near the top or at the top or maybe past the top. Space, I'll repeat it one more time and I'll pass it back to you. And I appreciate you letting me go on this long rant. Yeah. SpaceX, OpenAI, and Anthropic are not public yet.
Yeah, I mean, you lay out the case, right? AI is definitely real. The shortages on pretty much every single level of the supply chain are also real, and that is what's causing these you're not bubbles, but breakouts, right? As you call it. And I agree with you, but I think we're starting to see the froth, right? Especially the stories coming out of Korea. You have pensioners who are leveraging their pension accounts. You have people going out in SK Hynix gear on the streets of South Korea because that's the coolest fashion trend. Like, I've seen enough bubbles, I think, over the last 15 years to sort of get a feeling because I think I'm my own indicators. Like, I'm very comfortable just investing in Bitcoin, but when I see these things pop off, you're like, oh, I should maybe buy some options. But that's when I know that maybe I think you're right. There will be drawdowns, 30, 40, 50% drawdowns in these things, but over the next 5-10 years, they will be substantially higher. I guess my one question left on the AI thing is, you think that these huge names IPOing is a huge boon, but isn't that also a classic sign of a top when you have the largest names finally IPOing after all these years? Like, why did Elon Musk wait all this time to IPO SpaceX for now, right? And why is the CFO fighting against Sam Altman? Sam Altman wants to IPO as soon as possible, and she's like, I don't know if we have the right financials for it. Like, why is that happening?
Yes, there's a lot of unproven revenue on the AI lab front. And I do agree with you that IPOs can be a sign that you've reached the end, and that's the owners cashing out. But there's an unlimited demand for tokens, and the growth rate of Claude enterprise contract revenue growth that we've been made aware of is unprecedented in business history. So listen, the way to avoid the bubble is to participate in this through the S&P 500. And I'm not giving financial advice here. I'm explaining the conservative approach to participate in this revolution. Because if you go chase this or that company, you end up wearing an SK Hynix hat to a restaurant. And that is bubblish. I will grant you that. But that's not how I would recommend, to play this. And I teach at USC Marshall School of Business in Los Angeles, and I have students of all ages now, which is really fun, from the undergrad to the graduate level to even pre-college is now one of the programs that I teach over there. And last year, and this is about 12 months ago now, I was explaining to these kids, high schoolers, that they should read financial news. You don't even have to pay for anything. 5 Bloomberg articles a month that are free, a couple Wall Street Journal articles that are free, and CNBC.com will be enough for you. And if you were paying attention to ChatGPT, and all of these kids had been using it for years. So I said, if you were just paying attention, and this is hindsight is 2020 because I didn't do this myself, but I was telling them, if you were just reading the news and you were like, oh, wow, ChatGPT has 100 million users in less than a month, the fastest adoption by any technology ever in human history. I wonder which companies are going to make money off of all of this. And they would have, within an hour of like basic Googling, stumbled upon NVIDIA as the play. And maybe if you're young, you go all in NVIDIA, like many people just went all in NVIDIA or Tesla or Bitcoin over the last 15 years. And they would have 10, 20, 30, 40. I don't even know if, from 2022, what they would have done on their money, 50 to 100x on their money. So I didn't do this. So it is obvious in hindsight, but you do have to just pay attention to what the demand is at the margin. And we've had a Claude moment since, this is from that industry because I've been consuming a lot of their content now to try to stay up on all this. Everybody in that industry, business or computer side, science side, is saying that between November and January, everything changed. It was the Claude Cowork moment, Opus 4.5, then Opus 4.6. There was a 2 to 3 month period where the world changed forever. We haven't opened that door fully. That door isn't even fully open yet. So I'm sorry, Rob, but I don't even remember your question. I'm feeling so passionate about this.
Yeah, no, just whether the IPOs signal the top or not.
Yeah,
you clearly say no. Like the world is different, but then you also hear that line a lot too at tops, that this time is different, right?
and I can't speak for OpenAI and Grok. I do know that Starlink and the SpaceX side of the revenue looking forward is very robust. I mean, extremely. And I do know that the Anthropic, my own projections for Anthropic's growth rate are probably too bullish for public airwaves. Again, if you want to conservatively participate in this, you buy the S&P 500, and your portfolio will not be less than it is today in 3 to 5 years' time. It won't be, and I would say the same for Bitcoin as well. And there's no certainty in markets, but the it's really these adoption paths over these more medium-term time horizons that help me or gave me comfort in making some of these calls. And people, everything is public. You guys can read or watch my YouTube going back. You'll see the calls that I've made that are wrong, and you'll see the calls that I've made that are right. And, if we're being transparent, I was on and off from a recession watch in 2023 and for the early parts or for a lot of 2024 as well, as, the AI revolution wasn't as clear to me back then. But then I took my recession call off in, I believe, December of 2024. That's 18 months ago, approximately. And so I've been bullish for a long time. I'm not a U.S. Treasury doomer. In fact, if you look at where U.S. Treasury rates are today at 4.5% to 5%, go back to one of the things that I was very wrong on in 21 and 22. I said, hey, if rates go to 3.5%, I said, if rates go above 3.5%, it's going to be a disaster for the U.S. economy and for the stock market. And I was one of those people that said, there's no problem going from 0 to 2%. It'll be fine. Like it can. But people are like, no, if it goes to 1%, everything's going to break, from when the Fed started raising from 0. No, it got to 3, 4. And I was like, now it's going to break. Now it's going to break. But it didn't. 2022 was a bad year for risk, Bitcoin and the stock market for sure. But into 2023 or 2024, I'm like, hey, these higher rates are the US economy shouldn't be able to sustain these higher rates at the fiscal level, the private sector level. How can borrowing go on? And it did, and it broke through because we're in a growth and productivity boom, and higher interest rates are actually healthy for the economy because they raise the hurdle rate. They make capital go to more productive places than less productive places. And I'm not knocking on the Airbnb people, but there are pockets of the US economy that benefited from lower rates, that at a higher rate, the economics at the margin doesn't make sense. So the capital leaves and goes towards somewhere else where it can achieve the return. And right now, in a growth and AI super cycle, those are in materials, building, and technology at the frontier and everywhere in between. I've told this story before. A friend in Arizona, 3 years ago, he told me that in construction, he can't buy cement because Taiwan Semi is buying it all in the whole state. And that was the sign. There were signs. We had signs that you're not yet at the cap in where the demand is or where that future money is. And again, at higher rates, the US economy is doing very well on the aggregate. The US stock market and profitability is going very well at these high interest rates. So I like to be transparent. I like to call out all the times that I've been wrong. And I was bullish on Bitcoin for most of last year until the very end. Our liquidity index started to roll over, and then in January, I threw in the towel. There was a trend line around 90 something, if I remember correctly, and when it broke, it was just and it's over. Then you have to pull the bullish energy. You have to pull it, and you say it's not anymore. And then I made my bottom call at 64K. I called it the Jane Street bottom. It was more symbolic than Jane Street is manipulating Bitcoin down. It was more the timing of that story. And I'll be transparent about that. That 64 was my bottom call for this year. And I'm back to bullish again, but we also have our liquidity indicator, which swings from buy to sell. And so that also gives me a lot of signal. Bitcoin is still handcuffed by the treasury market and global macro and liquidity in many ways.
All right, we got to end this conversation on Bitcoin. I want to do a mini deep dive with you on where we're at, why you think the 4-year cycle no longer truly holds control over this asset. But before we get into that, we have to talk about our sponsors, our good friends over at Rhino. Previously, getting financial services in Bitcoin was slow, clunky, and scattered across all these different platforms. But Rhino is changing that. Rhino is the next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. With Rhino, you can buy Bitcoin with some of the lowest fees anywhere, make payments over the Lightning Network instantaneously across the world, send cash globally over Bitcoin rails, and set up automatic savings, DCA, stack sats on your schedule, build wealth over time. Soon with Rhino, you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement, all seamlessly inside the app. And of course, security is a top priority. Biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never, ever rehypothecated. So go today to rhinobitcoin.com, download for both iOS and Android, use the code Bitcoin News, one word, Bitcoin News, and Rhino will give you $10 of free Bitcoin right into your account just for getting started. So check out Rhino, great people, hit them up on X, more than willing to answer all of your questions and get you started on your Bitcoin journey or help you build your financial services across the Bitcoin spectrum with this just one app. Great team over there. Definitely check them out. All right, Nik, we are back. We've got over 2,180 people watching live across both X and YouTube. If you're on YouTube, hit that subscribe button. Really helps out the channel. Thank you so much for watching this. And we've got to talk about Bitcoin now because liquidity seems to be out there. I mean, these markets are going straight up. Bitcoin has outperformed gold since the start of the Iranian crisis, but it has not kept up with the S&P 500. So let's just take a look at the Bitcoin chart right here. Of course, this is where we are at now. There was the big February crash. You checked out in January, sometime around here when we got back up to 97,000. We all thought we had some hope for 2026, but then we had a cruel February. We've been chilling in the 60s, 70s, climbed out as of early May, back into the low 80s. We were feeling good, but then we banged our head against the 200, right? Like this right here, tough signal. If we had broken out of that, we might have had a bullish charge, but seeing it bang up against it, not being able to go through is not too promising. What is going on with Bitcoin? Why are we not following the markets to new all-time highs right now?
It's digestion. And what matters is Bitcoin's sensitivity to global macro and not necessarily the magnitude or the size of the move. So Bitcoin going from 120 to 60, and if it finds the bottom there, that's actually incredibly bullish because it did so in a wave of global risk off and a liquidity drawdown, higher interest rates, higher volatility, an oil crisis, and actually front ran the war by a little bit, but lined up with some of the treasury selling quite nicely. The sensitivity of Bitcoin to global liquidity keeps the fundamentals intact, which I think is a good story. The size of the move being, let's say, less impressive than the stock markets of late, it's not as material to me because it's still very correlated with the stock market. So the stock market has done well and Bitcoin has done less well. The stock market did poorly during the beginning of the war, but then recovered and kind of lined up a little bit with Bitcoin. Bitcoin did outperform the stock market at the start of the war, but that's because it did so poorly the month before and was in a bounce. This is a long-winded way to say that Bitcoin and stocks are still very highly correlated. This is something we track. And because they're very highly correlated, Bitcoin and stocks are still very much liquidity assets. And so why is Bitcoin, why did it bump up against the 200-day? These are more technicals that Bitcoin has to digest this 50% drawdown, and it can't just go straight back up. Markets have to let themselves play out. And one of the things that we're watching pretty closely at the Bitcoin layer are the May and June expiry. So the May options expire in Deribit this week, and then the June ones at the end of June. we're waiting for these markets to clear to maybe get some of the protection bets that were put on at the beginning of this year as we went into the drawdown. Start to let some of that roll off and free the market for the next leg up. So it's not a surprise that it hit 200 and drew down a little bit. I do want to see the 73 area hold. That's one of the areas I'm looking at fairly closely. Without 73, you really do start to open the door back to the low 60s potentially and the bottom again. So I do want to see 73 hold. So we're coming up against that. And but I want to see Bitcoin continue to consolidate without making lower lows. And actually, we've started to make higher lows. So the last low was still in the, I think it was in the high 60s or maybe the low 70s. I'm just going to check if you don't mind me here. Yeah, it's actually in the mid 60s at 65. That's really where I'm marking the latest or the last low. And so if you get another low at 70, 72, that would be good. That would be really good. And you want to see Bitcoin continue to consolidate and work off some of that bearish energy. And that would be my short-term outlook to Bitcoin. But then Bitcoin as a liquidity sensitive asset, I think if interest rates can not put volatility at risk. So even if they go up, it's an edging up and not a dramatic spike where it's a put buying event in treasuries, because that really hits all markets. We saw that in March. When put buying goes through the roof in treasuries, then everything starts to crumble. And so that's the holy grail of what we want to avoid. One more thing that we want to avoid is a spiking USD, because that ends up damaging global liquidity. But any one of these things by themselves can be potentially a risk. We want to see the market try to avoid most of these risks at the same time. And in that way, liquidity can stay buoyant. And then the kicker is going to be global banking assets over the next 2 years. I believe that they're going to rise in response to this AI supercycle, the growth and productivity booms that we're going through, and that should support risk assets, Bitcoin, and stocks. We put out a free macro newsletter every weekend at thebitcoinlayer.substack.com. So if people want to follow along, we're tracking a lot of quantitative metrics for you guys.
Speaking of liquidity, did you see this chart yesterday put out by Andrei Dragos, good friend of the show over at Bitwise in Europe? But he says that Bitcoin's historical relationship with global money supply is now sitting near the most extreme deviation seen in over a decade. The chart tracks Bitcoin and gold to global liquidity using a Z-score model with current readings falling below a -2 sigma band. So Bitcoin's never been more have a wider deviation from global money supply than right now. Does this surprise you?
So global money supply, which is a liability-based metric, people call it global liquidity, which is fine. It is a measure of something that people could call liquidity. That's not how we conduct our study at the Bitcoin layer. Our TBL liquidity index, it's a proprietary index. It's asset-based, and it has a collateral component to it, which means that as treasuries are the center of the financial system, the ability of banks to multiply those treasuries with fractional reserve lending and essentially leveraged banking practices, that ability to leverage is based in the strength of the treasury market and the amount of sovereign debt that they own, broadly speaking, as well as the amount of debt that they're extending to the private sector, which can be seen in global M2 or deposits on the liability side. So and Andre is a friend also, and I think he's an excellent analyst, we do not think about Bitcoin and global banking deposits, global M2, or any liability-based metric. That's not how we approach it. We do it from the asset side. And so when TBL liquidity indicator flagged a sell on January 14th, it actually did so at the end of December, and we confirmed it in the middle of January. We have a little bit of a lag for for certainty and for smoothing purposes. We want to make sure we're making the right call for people. That was the treasury market setting off an alarm bell that global liquidity is being sucked out. And you could have seen it in the yield curve as well. That was one of the places that you could have seen it if you were just trying to look at one metric. But global liquidity, TBL liquidity, turned over in December, January, because the treasury market started to really exhibit some weakness, and the dollar started to exhibit some strength, and Bitcoin responded accordingly. And then it turned back up in late March, early April, and we flagged that for people with a buy signal when Bitcoin was at 71,000, and stocks were much lower than they are today by four. I actually don't want to misquote it. These two risk markets are responsive to the treasury market more so than the liability-based metric of measuring deposits. Deposits are a way to measure the system, and I think that they're a good way to measure some things, but they're downstream from bank activity. They're the result of banking activity. They're the result of credit extension, and they're the result of money flowing into the certain parts of the private sector that are not utilizing other forms of shadow money, for example. So there's a lot of ways that M2 is a bad way to measure what we are trying to do, which is what is moving risk market. So that chart showing low correlation, it means that the way that we're doing it is a much better approach than anybody that's trying to forecast Bitcoin with global M2.
Makes sense. Well, Mr. Bhatia, I really appreciate your time. I want to respect it. So we're coming to a conclusion of this live show. You got some great comments here from our friend Kyle. Big fan of Nik. Great interview. This really was an awesome hour. I feel like class was in session, learned a lot, and you're a big AI bull. All right. So just give us one tidbit. Is Bitcoin going to end the year above 100K or below 100K?
I'll go above.
Let's go. I love to hear it. How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code Bitcoin News and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino.